Most investors know VOO, most investors know SPY, but almost nobody is talking about RSPA. So I decided to backtest it, analyze its dividend performance, total return, yield on cost, and then put it through the Simply Money drip score. Should investors be paying more attention to this fund? Let's find out. Welcome back to Simply Money. Today we're taking a closer look at RSPA, an ETF that gives investors exposure to the S&P 500, but with a different approach than traditional index funds. Instead of allowing a handful of mega cap companies to drive most of the performance, RSPA uses an equal weight strategy that spreads investments more evenly across the companies in the index. The big question is whether that approach actually benefits investors. To answer that, we're going to do two things. First, we'll backtest RSPA to see how it has performed historically in terms of appreciation, dividends, and total return. Then we'll run it through the Simply Money drip score to evaluate how it performs from an income investor's perspective, including yield on cost, dividend growth, income potential, and overall portfolio efficiency. By the end of this video, you'll know whether RSPA deserves a place on your watch list or if investors are still better off sticking with more traditional S&P 500 ETFs. Let's dive into the worksheet. So here we have the drip for RSPA. This sheet is available at Buy Me a Coffee at the link below. All of our sheets are there. I'm going to be showing you this individually. You can buy the drip sheets individually, but we're also going to be looking at the drip score where we have about 85 of these combined, and it's much more dynamic. It brings out more than just back testing. It shows whether it's better to drip or to take the cash. Then it shows its income versus decay ratio. Let's start with this sheet here, the drip sheet for RSPA. We're putting it back from inception. This is a much newer fund compared to like VOO or SPY, obviously. But in August of 2024, the price was $50.15. And if we invested $50,000, you can see we would have got 997 shares. Now what we have going on here, for those that have not seen this before, we have each time the distribution pays, we have the share price, what day it was, and then whether we drip, do 50% drip or no drip, how much is being paid, and then whether we're accumulating more shares or not. And I'll kind of go through that here in a second. But I want to go through this a little bit, just looking first of all at the share price, because a lot of times with high yield, and this is a decent yield at 9%, you can see down this column here what the yield was each month that it paid. And this has been very consistent, just over 9% every month. But when we look at the share price, we can see that it has also been very consistent. It's gone up a little, had some little drawdowns, but nothing major. As the news cycles and the market moves here and there, we've had some movement in it, but nothing ridiculous. And at the end of the time frame we're looking at, the end of May, and we should be having another distribution coming out after the video has been produced, I believe. June may already be out by the time you watch this. But you can see that the share price is held pretty steady. As we come down, you can see over this time frame, just over 4.25% price appreciation. So nothing amazing, but that's on top of this average of 9.34% yield on cost right there. The other thing I want us to look at is the distributions. Started out the first month at 39 cents, and it's been, again, very consistent because that price has been consistent, that yield's been consistent, the distributions have remained very consistent, never going really much lower than I see about 38 cents and up to about 43 cents right there. So it's very consistent. And when you're doing full drip, it shows in column D what the payment would be. And then you're buying more shares, which are accumulating down this row. So as you're getting more shares and you continue to get that distribution, you can see that your distribution payment goes up. And as we come down, we started at 390, 400, 412. It's been, again, very consistent on a monthly basis, $50,000. But now we're looking consistent, 470 the last 2 months. And that has been just reinvesting, which has brought your total return for reinvesting to 44.5%, or averaging about 23%. Annually. With full drip, you've gained about $12,000, and that's the share price going up, adding more shares, the distributions being added in there. It shows very strongly to be dripping. We can see that by not dripping or dripping 50-50, it still did very well. So this would be a fund, in my opinion, if you wanted to drip for a while and then turn it off, where you wouldn't have to switch to a different fund, because some funds don't do well, and we'll see this on the drip score sheet. Some funds don't do well dripping, and others don't do well taking the cash. So if you're accumulating, maybe you want to be in a fund that's dripping really well, but then when you're ready to take cash, you're like, I don't want to be in this, so you have to move funds. This, to me, would be one, so far it's showing that it could be for either, because it's very close returns. We'll look at the no drip here. We'll skip the 50-50. You can look down that column if you'd like, but the no drip, you can see your payment's exactly the same, but it gets smaller because you're not adding shares. You stay with this 997 shares, but with almost 2 years of history, you would have been consistently getting just under $400 to right at $400 every month. And over the course of this time, you would have received about $8,600 in cash. But you also would have increased your portfolio by about $2,000, which is at 4.35% return. This fund shows really strong performance, in my opinion, as a nice, steady income provider and with some upside to continue to grow your portfolio, to continue to increase those distributions slightly. If you're holding this long term, that would be really nice, as you're living off that to get a little bit of a raise from that appreciation. Even though the yield's staying consistent on this 9%, as you're getting a higher price, your payment's going to be slightly higher. So that would be a really nice way to do that. If 20, 30 years, you're seeing that average 2-3% growth each year while still getting that distribution. And so that is the RSPA drip sheet. Again, if you've not seen these, there's other tools you can use over here. You can decide what percentage you want to drip and see what it would look like. So you reinvest this amount and you keep this amount. How would my portfolio do? So you can do different amounts. And then on this calculator, you can just put a set rate. Say I want exactly $400 a month. Sometimes you're going to have to sell a little bit. Sometimes you're going to have some excess. So it just kind of recalculates that for you, and you can play around. And of course, you can play around with the amount you invest and when you started this from. Perhaps you wanted to start it a year ago and see how it performed. So there's a lot you can do with that. But if you want the full drip score sheet that has all of these tickers, you can see them all listed here in column A. All of these have individual drip sheets, just like what I just showed you for RSPA. But what it does here is it accumulates them and it summarizes them all on one sheet. So you can see the price appreciation. You can see its total return with full drip, no drip, and 50% drip. You can see its total yield on cost with full drip, 50% drip, and no drip. And then obviously your average yield. And it depends on what you put for the inception date. Every sheet you can go in and change what date you want it to begin from. So you might be looking like SCHD, where you have 15 years, and you can back test that. Or you have a newer fund like RSPA that's only 2 years, so you're only back testing that. But what I want to show you what this does is it gives you this score. First, we have the drip score, which we see right here in this column. And if it is green, it means that you do better by dripping. If it's red, it means you do better by taking cash. And then the percentages in that column show you by how much. So this one, RSPA, you do 2.07% better dripping than you do if you take the cash. Where we can look up here at PLTU, you actually do 11% better return by taking the cash. So it gives you a quick look and a score. And again, depending on what dates you set, on how you benefit whether you drip or don't drip. And the second thing we have here is the income versus decay ratio. And what this is letting us know, when we have high decay for, say, like this NVYY, we want to know, is it decaying faster than it's paying? Is the income keeping up with the decay and or exceeding it? Because we don't want to just get income and have equal decay because we're getting zero return. So just because like NVYY has a negative appreciation, you can see its total return is positive. And if we go over here, you can see that it gives you a yellow. It's not keeping up amazing, but it is in the borderline where you can make money. And there's others. You can go through all these and see that there's some that are actually in green, QDTE. It's green, meaning that your decay is not as fast as your income. Even though your appreciation is negative, you're making a better return regardless of the depreciation of the share value. So with RSPA, what we have is we have the 999 score, the purple, because there is no decay. It's actually positive. Any of these that are positive, meaning the appreciation is growing, and that helps you determine. Maybe you're one of those, you're like, I don't want a fund that has NAV decay. Even if the income is outpacing it, I want a fund that doesn't have NAV decay. I want some growth. It doesn't have to be amazing, but I want at least some growth. So you can just go through here and find the purple and say, those are the only ones I'm going to look at. But again, this for RSPA is set at 2 years, just under 2 years, where I believe the rest of these, because of the last scenario we ran, is at 1 year. And so you'd want to go change those to compare. Again, it gives you an opportunity if you want to compare them for the last year, the last 3 years, since inception. And you can do that on each individual sheet or just the funds that you're interested in. And again, you can see all the funds that are in here. You can scan through this, pause this, and read through all the different funds. I keep adding some. I'm about maxed out on how many tabs I can have. So we're not going to be able to add too many more. But if we have some on here that are not highly sought after, I might drop them off and add some more. So if you do buy this sheet and there's something you want on it that's not, just throw me a comment down below or email me when you buy it. Is the best way. That way I know your email and I can make sure you get your copy with those funds you want, and we will continue to update that. So what are your thoughts on RSPA? I got a lot of response from people on another video I did that was a request by a subscriber to do a portfolio that included RSPA, and a lot of people were like, hey, can you do some videos on RSPA? So that's why we're doing this. I wanted to get this out to you. I appreciate that input. One suggestion has led to another, and that's what you guys want, and that's what I want to do. I want to produce videos that are focused on what you're requesting the best I can, and so I appreciate that. Don't forget to hit that like and subscribe button. Leave me some comments. It helps the channel out tremendously. And again, if you want this drip score, which is all of these compiled, or you just want the individual RSPA drip sheet, those are available at Buy Me a Coffee at the link below. Again, I appreciate all your support, and we'll see you next time on Simply Money.